Hey James, thanks so much for your question about VDHG, which is a diversified ETF that gives you exposure to Australian, international, small company, emerging market, and bonds. It's a product that's obviously managed by Vanguard, the largest index manager in the world. And Vanguard is also a not for profit business. A lot of people don't realize that, which means that as it gets scale, it passes on cost savings onto investors. And so, particularly if you look at their products in the US, just because there's a whole lot more scale in the US than there is Australia, but fees have come down over time rather than with for-profit businesses, typically fees increase, if anything. It's true that that's happened in Australia as well, but perhaps just to a lesser extent. In any case, at least you know you're getting good execution in terms of the strategy because they've got trading desks around the world. And that's really important because that will tell you how closely they will be able to track the index without, whilst minimizing trading costs. And also from, as I said, from a perspective of being a not-for-profit business, you know it's going to be a really cost-effective option. And I've recommended it a lot. I like the product, and I think it's a really great diversified ETF. BetaShares also has DHHF. Now, the benefit of that fund is that it doesn't have any bond exposure. Now, VDHG only has 10% bond exposure, so it's not that big a deal, I think. But anyway, that one's worth checking out also. I will also include a link to all the listed diversified ETF funds in Australia, so you can check out their competitors as well. But I think Vanguard is a really good one for the reasons that I've outlined. Thanks, James. Thanks for your question. Cheers.